May 2023 common test, which is on the preparation of schedule to show the movement of property, plant and equipment. And this is the question 1D. Look at the requirement straight away. You are asked to construct or prepare schedule of movement of PPE for the year ended 31st of December 2022. So the beginning of the year is 31st of December 2022. You can also be asked to prepare schedule for one asset, but to prepare it for multiple years, maybe for 3 years, 31st December 2022, 2023, 2024. We'll be doing that in other question. But with AC1204 for A, I have covered 2 questions already on that. But I will be doing that with AC1104A in our next meeting. So look at the information given. So your information here is on PPE. And look at the asset that you have. You have the asset, building. And then you have another asset, plant and machinery. We want to decide how many column do we need. Plant and machinery. And at the same time, if you read further, you will see that there are no new acquisition. Yeah, there are no new acquisition. It was revaluation and just disposal. So in this question, there are derecognition of machinery, and there are another revaluation done for building. There are no new acquisition, right? So so what you can do now is to prepare the schedule. So you can prepare the schedule just like this, where you will put the column. And in this question, for your information, there are no impairment, no impairment. So you just stop at showing the cost valuation section, this one, which is A, I call A, and the accumulated depreciation section, and therefore you'll be able to find your carrying amount. So in this case, carrying amount here would be just A minus B. There is no C here because C is about impairment loss. So no impairment loss. So go and put the information that you have been given FOC, free of charge, which is information from the question. So you can see information given in the question. For example, you can check that these are the information given here: 1 million and 500,000. So this 1 million and 500,000 is the cost as at 1st of January 2018. 1st of January 2018 is the date that the asset was being purchased, and you have been informed the cost is this much. But this is not the amount that the year that you are concerned. The year that you are concerned is after several years, which is 31st December 2022. However, on 1st of January 2022, beginning of the current year, the cost of the assets still remain the same because there are no changes between 2018 up until 1st January 2022. So this building of 1 million is also the one that you will show as at 1st of January 2023. So it should be the same for this 2 item here. So the building carrying amount, not carrying amount, sorry, the cost on this date is the same as per January 2018. So you will take this 2 figure and you are going to put into your template, which is the disclosure notes here. So you will put here, first you put the figure for building, right? This one, building. Second, you put the figure for machinery. Okay. Machinery. This is May 2023. Let me check. Machinery, 500,000. This is Malaika. Wait, yeah. Sorry about that. May 2023, have to check where is. So the first part here should be 250,000. This is 250,000 here. 250. Okay. So you have to include there. And okay. So the beginning balance was how much? Let me just check again. May 2020. Okay, 1 million. So 1 million. Now, let's go and look at the information now. Information given does not give you anything to do with accumulated depreciation. Do you notice or not that no accumulated depreciation was given to you directly like it was given in the previous question that we discussed. However, there are information relating to the estimated useful life of the building, which is 25 years, and also the estimated useful life of the machinery, plant and machinery, which is 10 years. So you can make use of this. And then on 1st of January 2022, you are informed the building was being revalued. Sorry, here is 1st of January 2022. Here should be 1st of January. Please make correction here. This is not 1st of January 2023, 2022. So the current year is 2022. I'll just make some correction there. So 1st January 2022 for the building, which is the asset that I colored in green, on that date, 1st of January 2022, the building again was revalued. So similar to what we just did just now, it was revalued at 1.365. So 1.365 is the fair value. And you need to compare this fair value, which is on first revaluation, with the carrying value also on 1st of January 2022, where you need to find first the accumulated depreciation. And next one, you are informed that the plant and machinery was not revalued, but it was sold for 280,000. So you also need to go and find out any accumulated depreciation that has to be eliminated for plant and machinery, accumulated depreciation to be eliminated also for building, and for plant and machinery, you also need to find how much is the proceed, all this, right? So that you can see what are the costs, what are the profit, right? But profit information is not important for the preparation of the disclosure note. What is important is what is the cost being disposed. So here the cost that is being disposed, you are informed, plant and machinery, it was sold off for 280,000. So you will have to check what is the plant machinery. It was 500,000, and this 500,000 is the one that you will dispose. So this is the cost that you will dispose. So I will write down here. It will be disposed. Because you are not informed how much, it means that you dispose all of the plant and machinery. So you need to go and check what is the carrying amount on 1st of January and check whether there is a gain or loss. So this disposed cost must be eliminated or must be derecognized. So you need to go and eliminate this. Eliminate means you need to go and eliminate by debiting, disposal, and crediting plant and machinery. So you have been informed that the revaluation model for the company was used. So this is revaluation model was used for both building and land and machinery. So for both, you could use revaluation model. No depreciation will be charged in the year of disposal, which means that this is yearly basis, and the year end of the company is 31st of December each year. Okay, that's the question. So let's just do things that are in this first paragraph and put that into our answer. So number one is for you to do for your building. So for building, you need to go and find out what is the fair value on 1st of January. So fair value on the 1st of January given in the question just now was 1365, right? 1365 is in the question. You can check that question. You can find that 1365. You need to go and compare with the carrying amount here, which is on 1st of January 2022, because the revaluation is at the beginning of the year. To find that, you need to first take the cost, which is the cost 1 million, this cost, which refers to the cost of the building, and find out what is the accumulated depreciation of that building. Earlier, you are informed in the question that the building has a useful life of 25 years. So you will divide that by 25 years, and you're going to check from 1st of January 2018 until the revaluation date, 1st of January 2022, how many years and how much is the accumulated depreciation from the date you acquire, date of acquisition, which is this one here, and up until the date of revaluation, which is 1st of January 2022. So if you do that, I have done the working here. I take from 1st January 18 until 31st December 21, which also means 1st of January 2022. I divide by 25, and that was 4 years. Multiplied by 4, you will get how much? 160,000. So this is the one that you will go and debit accumulated depreciation, just like what you can see here, debit accumulated depreciation, and you are going to go and credit your building. So when you do this, you debit accumulated depreciation, you credit building. So this one will be deducted in your notes, yeah, in your notes, and this one will be also deducted in your notes in the different section. Different section here means the one which is in this section. So you can see here, for the building that was being debited, it is actually here. First, I put the balance. So now I calculate the balance, right? When I calculate the balance, I must put the balance first, because later you want to eliminate. But at the beginning of the year, the balance was not given. So you calculated it first, 160. You get the figure, you transfer here. After you have transferred here, you know that there is an revaluation. The accumulated depreciation must be eliminated. So therefore, 160,000, which is 4 years depreciation, is being removed. Remove means you are going to eliminate. Eliminate. Debit means to remove from the accumulated depreciation. Credit building means to remove from the building account itself. So credit, which is to deduct for building. Debit, which is to go and reduce from the accumulated depreciation. After you have done that, you'll be able to get the carrying amount. The carrying amount is 840,000. So if you compare carrying amount with the fair value, first fair value 1 actually here, because this is first fair value. I put here first. On 1st of January 2022, it is 1365. So you compare, you get the surplus to be 525. This surplus is what you are going to debit to the building. Yeah, it is a surplus. 525 credit ARR building 525. So ARR won't appear, but we want to see what is in the building section. So building section here, revaluation surplus, you have the figure 525. Okay, done with that, there is no disposal for building. So you can now total up and you get 1365. And in the same year, the building, starting from 1st of January 2022 up until 31st of December 2022, which is the current year, until 31st of December 2022, the current year, you will have to recalculate the depreciation. Your recalculation will be based on the revalued amount. Revalued amount means the 1365, the fair value, and you have to divide by the remaining useful life. At first, the useful life was 25 years. You have accumulated the depreciation for 4 years. So now the remaining useful life is just 21, because 25 minus 4. So take 1365 divided by 21, you get 65,000. That 65,000 is the current year depreciation. Depreciation for 2022. So that current year depreciation, you will have to go and show it in the SOPL. So debit building, depreciation building, credit accumulated depreciation. The one that I highlighted in brown here is the one that you need to include in the calculation. This brown in color there, working 2, you will include in your buildings movement. So you include there 65,000. So these are the working for the first part, which is no disposal for building. It was just revaluation. So 1365 minus 65, you have 1.3. So that was 1.3 million. 1.3 million. Right. Okay, we'll move on to the next question. And this is for the machinery, the part on machinery. Machinery. For machinery, you can check and see there was a derecognition. So for derecognition of machinery, you are going to check and find out. Okay, go and do it first, and you will be able to get the information regarding machinery. So let's do that. So beginning of the year, the figure here for the machinery, beginning of the year, the amount here was how much? Let me just check. Okay, wait, yeah. I go back to the question. 500,000. So I wrongly put the figure. This is actually 500, but not 250. 500,000. So that was at the beginning of the year, 500,000. And there was no addition, so there is no addition, but there will be a disposal of machinery. So if you can check here, the machinery here on 1st of January 2022, the amount is 500,000, so equals 500,000. So I'm going to show it here because there is a disposal. Okay, 500,000. And you need to go and find the accumulated depreciation from 1st of January 2018 until 31st of December 2021. Why? Because the information tells you again that the building was revalued and also the plant and machinery was also sold on 1st of January 2022, the same date. So you need to go and find depreciation for 4 years for machinery. So you will repeat the same procedure, but you take the 500,000 divided by 10, multiply by 4 years. So you have 200,000. So this 200,000 is the thing that you are going to repeat again, which is to go and debit. I do a simple one for that. Debit the first, you are going to go and debit accumulated depreciation because these are the amount at the beginning of the year, and credit the machinery. However, this 200,000 as well is the amount that you are calculating for the beginning of the year. Beginning of the year means since the company did not give you the accumulated depreciation balance. So what you calculate first, put it here. Put it in the this section, put here 200,000, put here first as the beginning balance. So I put pink here so that you can see which one belongs to which. Okay. Okay, that was the figure here. And after you have included the beginning balance, since it was not given, now you are going to eliminate the accumulated depreciation. So now only you can go and debit accumulated depreciation, credit machinery. So when you debit, it is actually removing it from the accumulated depreciation account, right? And for the charge for the year, there is no charge for the year. Why no charge for the year? Because all asset was removed or was derecognized at the beginning of the year. So it was derecognized at the beginning of the year. So therefore, there is no depreciation at all for this asset since it was disposed at the beginning of the year. So let me just do the working here. So the balance will be 0. Here also you can see when you derecognize, just now you derecognize how much? 500,000. So this one also must be eliminated. So debit, disposal, credit, machinery. How much? 500,000. So when you credit machinery, the machinery balance that you have here must also be removed. So you have here disposal. So this disposal 500,000, which is this one here, 500,000 is being removed, and therefore here you will have 0. So let me just disposal. So it will be negative sign because dispose. So I put here negative sign, right? So here you would get the no more balance here. No more balance. All right, let's sum this up. All right. Okay, 0. So you can see at the end of the year, the balance here is also 0. Okay, the carrying amount, if you want to find further, but this information is not needed for the construction of the disclosure note. Even if you stop here, you are already complete with your task here, meaning to say that there is no other thing that you need to include. But this is just for the purpose of showing that in the statement of financial position or maybe statement of profit or loss. So you can check here. Disposal was given in your case. The proceed is how much? The proceed was given in the question was, go and check. If you check the question, you can check it was 280,000, the proceed. So if we compare the proceed here, this one, right, with the carrying amount is 300,000, you have a loss. And that loss on disposal, it does not affect the movement. It is going to be shown in the SOPL since the proceed is less than the carrying amount. So the loss of 20,000 will be debited to the SOPL. So it is not going to be debited or included in the notes. So we are done with these notes for 5 marks. So make sure that there is no balance for the machinery because all has been disposed. But for the building, the accumulated depreciation are still there for 65,000. The carrying amount is 1.3 million. Okay, that's it. I'm going to stop for this particular video.